one of the markets that we've had our eye on quite a bit in the chat room, and this was rolling from the September contract now to the October. We were actively trading out of September. The first notice date is Monday. And we were actively seeking to get into October. So a couple interesting things about the 2 weeks before the rollover of the current front month as we approach what's going to be the new front month, in this case transitioning from September to October. There sometimes will be a period of time where I might be still in September while I'm trying to get in, and actually might get a fill in October. So don't be surprised by that. That was not the case this time. What we wanted to do is take advantage of a surge higher in September to scale out of that, which we did, scale out of that winner. Nice trade for us, almost 4 points. And then as the market pulled back, get into October. Now, October is not going to put us in that rollover window until the 12th of September. So between now and the 12th of September, we have this window of opportunity. And that's 2 weeks, by the way, in front of first notice date. It's not like we need to get out on the 12th. We just want to start preparing for rollover. So between now and the 12th, I'd love to see this market retest the resistance that we see based on this Darvis level right here. I'd love to see that right in here and give us an opportunity to scale out once again and get a nice, fairly peaceful winner out of crude once again. Now, I will say I'm a little surprised, but still grateful by the timing. There are two, I think one's a depression, tropical storm maybe, and the other is maybe a hurricane or a tropical storm. And both of them, we have two storms off the east coast of the U.S., southeast. And it looks like they're far enough south that their path of doom. Look, I'm a Floridian, so you're going to get a lot of sarcastic hurricane commentary from me. I've been through 3 decades of these things. So the cone of doom is leading both these storms, I believe, simultaneously into the Gulf. There is no way that I want to short crude into that type of scenario, or B, I'm actually pretty darn happy we got the move. I was surprised that this market was even willing to sell down to the level. Hey, I'm grateful, but kind of surprised. Nonetheless, we've had 3 down days in crude. I like that. 3 down days, three candles at lower lows and lower highs leading us into the wave. Fantastic. We hit our 41.55 entry to get long, or to get long the QM mini. And then finally, for those of you that wanted to buy the calls, we got it. All right, we dipped down into that zone by 9 cents. So if you have a 41.55 limit order by trading through 41.55 by the typical spread, you're assured your fill. Unless you're trading huge size, in which case it's a different conversation. So crude fired off. And I like this trade very, very much. If we were to go test this low again, if both those storms, sort of fizzle, which would be great, clearly. But if they both fizzle out, so be it. I still believe that after a pullback, we're going to see a resurgence to the upside. Not a huge move, but this is a double green market. Double green meaning 8 is over 13, 13 is over 21, and 21 is over 34. That is a bullish structure using those exponential moving averages. The pullback gives us the opportunity to buy the QM mini, CL full size, or buy calls on the futures. USO is no longer an alternative for me, gang. I haven't used the USO at all. Now you might say, well, Rag, what about the RB? What about the RBOB gas contract? RBOB does not necessarily have to track with crude, although generally crude is the dog walker and RB is a dog because RB is a product made of crude. But demand, refinery, there's a lot of things that are going to separate the sort of correlation, if you will, between crude and RBOB. RBOB does not have a double green bullish structure. I would not want to be short RBOB, especially if those storms come and get into the Gulf, maybe strengthen in those warm shallow waters and hit the coasts. Now we might have refinery disruptions. That's a big if. But overall, the structure on crude is far, far better. So I'm not necessarily looking at RB or the UGA ETF. I do like this setup on crude. We're long from 41.55. Initial target. Look, while I would love to see 44.70, which is stepping out in front of the 200 EMA, I might just say, look, if we can get to 43.90, I'd be tickled pink, with probably an optional target at 43.40 or 43.45. All right, so that's what we're looking at right here on crude.